Hey everybody, welcome back to the channel. If you're new, welcome, and if you are a returning subscriber, thank y'all so much for coming back. I do appreciate it. So I have a really good video today, and it was based off of a comment that I received, and I thought it was a really good one. And I love when I get good comments that really inspire me to make videos that I haven't really thought to make before. So before I get into the details, my name is Shalise. I'm 41. I'm a mother, a wife, a worker bee. My husband and I are trying to get to financial freedom, and we're documenting our journey here on YouTube to encourage as many people as possible to start. But we are not financial advisors. We are not fiduciaries. We are just investors. We are the people all the gurus tell to invest. So we are trying to invest and get to our goals. So make sure you like, share, and subscribe. Beware of scammers and fake pages. And I hope that you guys find some value in this. So today I'm going to be sharing with you what happens if you start investing, right? And let's say you stop, right? So I bought up one of our Roth IRAs from 2021. Now I do open up different new accounts for our Roth IRAs, number one, because we do the backdoor method. So it really helps with spreadsheet and tracking purposes, but this will also help for future conversion settings that we want to do for our investments as well with the whole Roth conversions, which is another video. But having the different accounts by the year just makes things easier for us. So it's been 5 years since opening up this particular Roth IRA, and we put I think it was $6,500 into this, and or 6,000, one of the two, whatever the contribution limit was back then, and we left it at that. And we did not put any more money into the specific Roth IRA account. Again, we have other ones, but again, I do them by year. So I put the money in and I left it. I want to share with you guys what your investments can look like if you just buy the shares or buy the funds and then you stop, right? Because we stopped in this particular account. Now we do have several accounts with Fidelity, but this specific account, we maxed out the Roth IRA for that year and we finished, okay? And so we bought FXAIX, so you don't have to make it complicated. You don't have to have a bunch of individual stocks or even a bunch of ETFs or index funds. FXAIX is a great set it and forget it. It's a great fund to it tracks the top 500 companies on the S&P 500. Really good, solid companies. A lot of the companies we all have heard of, like Microsoft, Nvidia, Apple, Google, etc. And so if your risk is really low, like you really don't want to have a whole lot going on, but you still want to buy some securities, you still want to set yourself up for your future, FXAIX, you can't really go wrong with it. It's like the Fidelity's version of VOO. Many of us have probably heard of that. SPLG is like the alternative to that one. Or SPYM, I know they changed their ticker. But yeah, it's the top 500 companies on the S&P 500. That's simply what it is. And so we bought this in 2021, like I told you guys. So let's see our average price, and you can just see all the details here. I will bring up an investment calculator in a little bit, and I will dive into what FXAIX in a little bit of more detail. So just stay tuned. But I wanted to show you what this looked like. So the contribution we made back in 2021. Look at how it grew, up 44%, which is crazy. Our average cost is $167.10. Right now, the last price. I am filming this on MLK Day, so shout out to MLK. But the markets are closed. So the price from the previous Friday was $241.14. So you can see that we are up again almost 45% in this position again after 5 years. 5 years we just maxed this out and left it alone. We did not add anything to it. We did not sell anything when the markets were kind of red or on a downturn. We didn't do any of that. Also, side note, we did reinvest the dividends in this particular Roth IRA account. So I just wanted to point that out because I know people will ask me. We turn the drip off a lot in our taxable accounts like the Robinhood and all that. But when it comes to like Roth IRAs or anything like that, the drip is usually turned on. But you can see we're up $2,676.88. So again, I'm not showing a position that has 100,000 in it, 50,000 in it, 25,000 in it, because we do have a rather large portfolio of just a myriad of different securities. But I wanted to show you and to motivate those who may not have a lot to invest. If you can just try to max out your Roth IRA just once, maybe you can't do it every year. Just once. If you can really try to do it one time, and maybe you just have to stop because life happens. We all have bills. Things are going on. I'm telling you, this is where you can see compound interest really shine in your favor. Because look, after 5 years, 45% pretty much. This portfolio or this particular account is at $8,718.65. We have 36.15 shares. Crazy, right? Really crazy. If I come to this particular website, again, Fidelity, this really gives you some detail when it comes to FXAIX. So it's a really, really good fund. I mean, it has 5 stars. The returns are pretty solid and the expense ratios is low, which is pretty good. And you get some risk, right? Because you want some risk, it's growth, but it's not overly risky where you're kind of like, whoo. You can see some of the performance right here. Let me adjust my screen a little bit. Okay, so you can see average annual returns, okay, as of December 31st of last year. So the past year, 17.86%. Can't beat that. The past 3 years, let's just say 23%. I'm just going to round. 5 years, let's just say 15%. 10 years, 15%. Where are you going to get those type of returns in a savings account? So savings is good. Having a savings account, having an emergency fund are all great. And I hope everyone has one. If you don't, you can save and invest at the same time. If you have debt, you can save and invest and pay off debt at the same time. You just want to make sure that you have a strategy for it, but you can do all three. But you don't want to not invest something because, again, we're all getting older. We see the state of the economy. We see inflation. The cost of everything is just going up. So having something is always important, okay? But I come down here, you can see just some fund details right here. You can see the top 10 holdings all right here. NVIDIA, we own NVIDIA, Apple, Microsoft, Amazon, which I know many of you love, Google, which has been doing phenomenal lately, Broadcom, Meta, Tesla, Berkshire. So all companies we probably have heard. These are the top 10 holdings here. You can see the expense ratio is 0.015. Super, super duper low. Now, again, it is a little pricey, $241, but again, you can invest with fractional shares here, so don't let that discourage you. And you can see that it's just a really, really good, solid fund to have. You can see, let me just come here, you can see again some more of their performance. Let me come over to fees and distribution, so you can see that this does pay a dividend. The last dividend it paid was for 72 cents per share on December 19th. And oh my goodness, my screen is cut off, but that's for $237.27. That's what it was then. Right now it's at what, $241 or something like that, which is kind of crazy. Again, things grow. Let me bring you to a calculator. So let's say you max it out, right? And you have to stop, or maybe you have to lessen your contributions. So you can invest in a Roth IRA and you don't have to max it out. You should max out if you can, but if you cannot, it's okay. And some people will shy away from the Roth IRA because they feel like, I have to max it out. You do not have to max it out. If you only put $1,000 into your Roth IRA, that's fine. If that's all that you can do, that's fine. If you can only put $2,500, that's fine as well. But remember, you have to have earned income when you're using a Roth IRA account, okay? A lot of times if you get bonuses, a raise, a refund, you can use that as well, okay? So let me come down here. So I put the value of that Roth IRA, which is $87.18, and let's say I leave it in for another 10 years. Rate of return about 10%, compound daily. Let's say I only put in $100 a month. So we're not even maxing it out. $1,200 a year we're going to put in from this moment on, right? This is hypothetical. Into that Roth IRA account I just showed you of FXAIX. After 10 years, this money will be valued at $23,509. So again, remember, I maxed it out once with $6,000 or $6,500 in 2021. In 2036, just putting an extra $100 in a month. That's it. $23,509. Now imagine if you could max it out. Imagine if you got a tax refund or a bonus. Imagine if you got a side hustle. Imagine what you can do if you just put a little bit of extra in. This is the genius of compound interest. This is where it really, really shines. So again, you can play around with this calculator. Maybe let's say you can put, let's say if you do 5,000 a year, let me just grab my phone real quick. 5,000 divided by 12. Okay, so it's about $416.67. Let's just say $420. If you can put in a month, calculate, it'd be $50,811. Insane. So I always try to tell people, if you can, try to at least max out your Roth IRA. If you can't max out the 401k or the 403b, 457, if you can't max out an HSA, which I love HSAs, I have videos sharing our HSA, but if you can't max that out, because there's a lot of accounts, there's a whole lot of accounts, you're trying to do a lot of things and you don't want to be overwhelmed. But if you can do a Roth IRA, that's one of the great accounts because all of this money will be tax-free. Tax-free. Did you hear me? Tax-free. So I will leave a link to this calculator down below so that you can go and play around with it as well. And I will leave the link to this Fidelity, like the FXAIX summary, so that you can go and play around and you can see some of the compositions here, like the weighted sectors. Let me just come down here. Market sectors here. So most of this fund is in tech, followed by financials, followed by consumer communication services, followed by consumer discretionary, followed by healthcare. So you can see how FXAIX is made up. It's a really good blend of large growth companies or large cap companies. So again, guys, I hope that you enjoyed this video. Do you have a Roth IRA? If so, what do you have in it? Share below. If you have a Roth IRA, tell me one of the funds or one of the stocks you have in yours. Again, guys, I hope that you enjoyed today's video. Make sure you like, you share, and you subscribe. And until next time, I will see you guys in my next video. And if you want your investment planners, I will have a link down below so you can watch the full walkthrough video. And if you want to, you can grab a planner for yourself and start tracking your Roth IRA progress. Thank you guys so much, and I'll see you in my next video. Bye-bye.